The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly source for options, wit, wisdom, and occasionally entertainment. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network. And of course, if you'd like to learn more about this show, then surf on over to optionsexpress.com/OXradio. You can find some interesting offers there from the folks over at OX. And if you'd like to send us questions to appear on the show, then you can surf on over to the optionsinsider.com/forum and post your questions there. For under listener questions for Options Insider Radio, you can shoot them over via Twitter at twitter.com/options or on our Facebook page. There are no shortage of ways to get yourself featured on this show. So if you have an interesting options question for the all-star panel here, then by all means shoot it over to us, and maybe, just maybe, you'll be featured on the old show. And speaking of the all-star panel, joining me on the panel today, starting off with the man holding down the OX hot seat, Mr. Beret himself, a.k.a. Mr. T-Nav, Tim Navabi from Options Express, switching seats with Mr. Grigas, who was called away for pressing NATO security concerns.
Hi, Mark. How are you?
Good. How are you doing?
I'm doing pretty good. John got called away for that security meeting, and we'll see how that works out.
Are you surrounding the OX head?
Seriously did? They're worried that, like, all right, I'm sorry, but, you know, I get that Options Express is a big company and that they represent the man, but if I'm an Occupy, whatever, protester, Options Express, or, like, you know, Schwab or something like one of the really, they're not going to be who I'm after. I mean, I'd be after like SIBO, CME, the Federal Reserve.
This is more about
Option Express could be about like 19th on my check-down list.
Yeah, this is mostly about logistics. You know, I mean, people coming in from the south side, you know, with the train schedules sort of being reworked. You know, our location, sort of, you know, how employees are expected to get here, you know, so that's pretty much what it is. Yeah, it's not necessarily.
You know, Sebastian talks a big game as he's in his fallout shelter, and him and Andrew are chained together, eating their last ration of their meals ready to eat.
As soon as I get off this line, I'm going to go back to hugging Andrew naked for human body warmth.
That's just a regular Monday for you two over there at the pits.
Right. No, that's how we operate here. It's good for me because he's so much bigger than me.
It's team building at the option pit. So you're not
in the have a gas mask too. I know.
So that's just for another regular Monday at the pit. But so you're not surrounding the OX HQ then in machine gun nests and barbed wire.
No, but I noticed the ashtrays were gone where the smokers hang out. They were, little 3 feet concrete ashtrays. They moved those. So
really,
wow.
They're afraid someone's going to smash their way in with the ashtray.
No, they don't. They don't want all those loser pot smokers smoking outside the building.
Yeah, it could be that too.
Well, so, we don't want to draw an area where those guys smoking spleef think they can ash.
Well, listeners,
move along, people, move along.
If listeners haven't guessed it by now, we are also joined on the old All-Star panel today by good old Mark Tinney Sebastian from Option Pit, who dragged himself away from hugging Andrew long enough to join us on the old program today. Mark, it's been a while. I know you made the show when I was out of town, but I don't think you and I have been on the old Option Block together in a while.
No, it's been too long, and I wanted to change that, so that's why I'm here. Been really busy. Groupon up to $1.50 after the bell.
Yeah, up trading around 13.5 right now. So
wow.
There you go.
So apparently people are they released some sort of earnings that currently are not blatant lies, but probably are in real life.
So all those people piling in and writing to us begging to sell the 9 puts for whatever they were trading last week, like I think 65 cents. Apparently got their money's worth on that one. So,
oh, yeah.
Interesting
it's
stuff.
already giving away 30 cents. You watch this. I mean, they had a big short squeeze on this, and I wouldn't be surprised if there's a kind of a big, huge buy-in after the bell, pushing the stock up. But I have a hard time believing that there's any real long-term residual value of this company.
Well, I feel the same, and apparently someone else out there does too, because one of the things we have in the old option block is a downside put 1x2 in Groupon to discuss. So that's a little tease for you listeners. And last but certainly not least, joining us today on his regularly scheduled day is good old FHM, a.k.a. Mike Cavanaugh from Know Your Options, Inc. Monday, Mike, welcome to the show, sir.
It is great to be back on Monday. Hello, everybody. Hello, listeners.
I take it you recovered from your massive cross-country road trip with your fellow boys over at Sweetman Cherry down to OIC and back again in like a couple of days.
I am not 21 anymore. It takes a good week for me to work Bourbon Street out of my system, apparently.
Especially when you're out to 4 a.m. at the House of Blues with all those wealth advisors.
Yes, wealth advisors at the House of Blues on a Friday night before an 8 a.m. panel.
Yeah, Kavanaugh had to be on stage at 8 a.m. and he was at House of Blues till 4 a.m.
Oh, that sounds fun. Bet you there was some 5-hour energy involved in that trade.
There might have been a wee bit. It was an interesting morning, to say the least.
Yes.
But yes. And now with the team finally assembled and mostly recovered from New Orleans, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we highlight what was trading, what caught our eye in today's activity today, and was mostly a down day across the board on most of the major indices, down about 1%. The S&P down to 1338, the Dow down to 12,695, the Nasdaq down to 2902, and the good old VIX cash ticking up about 9% or 1.87 handles to 21.76. So north of that so pivotal 20 handle yet again. So interesting stuff. Of course, Mr. Sebastian already alluded to probably the big news of the day, at least in the after hours perspective. We were all paying attention to Groupon, watching Groupon, finding out some interesting ways to trade Groupon, of course, leading up to the impending Facebook IPO this week. Groupon earnings take on even larger significance. Of course, this is one of the larger quote-unquote Web 2.0 names to launch in the run-up to the Facebook love. So seeing that they're already selling off a little bit in the after hours, they're down about 70 cents or so from where they were trading a few minutes ago, trading about $12.75 right now. Of course, this is after the day when they were up nearly 20%, or about 1 3/4 handles to 11.74 in the day's trading. As Mark outlined, there was a short squeeze, so there was a lot of opportunities over the past week to be trading in and out of Groupon from an options perspective. I'm sure in your pit reports and in your various mentoring strategies, you guys have been outlining a lot of Groupon of late.
I have on a big, huge July 1x2 on, put 1x2.
Oh, maybe that's you I'm talking about then in the option block in a couple.
Or the guy
minutes.
copied me, because after I posted it, I talked about it. So it's completely possible that guy got the idea from me. But no, I think Groupon is going to have to go down to the Google bid price, and that's where it belongs. The company doesn't make very much money. They lie. They have zero accounting credibility. And but hey, you know what? Hey, you can breathe a little life into a Groupon today. But I think I saw a good no, don't have a good analogy for this. But anywho, this it's up about $1, and I would fade this. I'd absolutely fade this. So that's just me. Yeah, but I think the more interesting thing is what kind of happened market wide. We didn't close on the lows for the S&Ps, but volatility closed on the highs. The VIX closed on near its highs, breaking that 21 and touching that 22%. May is now below cash. Cash is, I'm looking at June, and really June's the one that's important now. We had the June future close out at 23.20, and you've got the last trade I'm looking at, 325 and 225, 23.10, and you had VIX closing around 21.90. That's not a really great sign, and for there be about 30 some odd days left in June and be trading barely at a 1-point premium, and for the cash to be above May signals some very, very, very nefarious short-term expectations. Also, I would point out that VIX is now cycling higher as opposed to cycling lower. We saw the VIX break out above 21%. This was kind of my key level. I think we've got a quick trip to 13.25, maybe 13.10 heading our way before, and we might see VIX threaten that 25% level before all is good and done. And with that, TLT and FXC hitting lows and TLT hitting highs, or TLT, or bonds hitting highs is really what I should say. Just a lot of ugliness out there, but in another day or two, I think we're going to get a nice little panic pop, and it'll be a great opportunity to go in and sell some bond vol. So and get bearish bonds. I don't see how treasuries can stay. The 30-year can stay this high for much longer.
You've been on that TLT tip for a while now. That's your product du jour.
It eased off and now is popping again, and so it's just the way it is. FXC is kind of the interesting one. I mean, you and I talked with Don about this. You could have bought Eurovol for 8% and it's now 11. That's why you should. This show and Volatility Views, two best shows you can possibly listen to if you're a trader of options. And just over the last couple of episodes, so many tradable ideas over the last couple episodes. So anyway, just absolutely nuts today. I am very nervous about this market. I think we've got another trip south. So
certainly seems to be heading that way. We closed very weak at the end of the day. We didn't see any of this end of day bounce to the upside. Not even from a gamma scalping perspective. It's just been straight down. Everything closed south. Apple closed south of the 560 handle. All the big names. Ford closing down on the weakness on the day. So yeah, not exactly any signs of end of day exuberance to let us believe that the worst is behind us. Mr. T-Nav, Mr. FHM, what were you two watching in today's maelstrom of red here?
I see, just a whole lot of red on the commodities board. I mean, copper down almost, copper down 3.5%, crude oil down 2%. I think those are just some big things to sort of take a look at and see.
What our friend Zynga's been doing on the heels of this Facebook IPO, and it had a little pop today. It's been getting its face ripped off, so to speak, the last 4 weeks. But it was up about 50 cents today, and it's up another 10, 15 cents in the after hours. So that's just one I've been focusing in on. I know we're the social media stock bashing show part-time. But that stock's starting to look pretty interesting to me.
I know Andrew and I, last week, I believe it was, maybe 2 weeks ago, had an interesting discussion about how we both had interesting opinions on Zynga and how to use Zynga as the synthetic Facebook pre-IPO and leg into some risk reversal, some bullish risk reversals for some fairly decent levels. He ended up doing the full risk reversal. I ended up just doing the short downside put spread. I think my end worked out better, especially since I closed it out since then. But he's looking better. He's looking better now if he still has it on. Though I think he said he was going to close it out last week, and I haven't had a chance to get the update from him since then. How his synthetic long Facebook aka Zynga is working out for him. But you're right, this is another one like Groupon where there are a lot of legging opportunities here and a lot of interesting potential. Speaking of potential, I know you guys over at KYO, mostly Uncle Mike, but maybe since he's not here, FHM, you can speak for him. Have been pretty bullish of late on Ford. Ford, of course, another name we've been talking about here that has kind of retreading some of its lows in the recent months. Are you seeing this as perhaps a new Wheel of Fun opportunity to load up on Ford again, or are you guys just kind of washing the hands of Ford and allowing your puts to do their thing?
Mike is the one that's been trading Ford the most. I mean, you look at Ford, and to me, Zynga represents the ability for a stock to really potentially take off and pop because it's relatively new. If you look at Ford, they make cars. Cars don't have a fan page that you can click on that shares information you can turn into a revenue stream overnight. So anything that happens with Ford to the upside, I don't think is going to be as appealing as Zynga or Facebook. So that's all Uncle Mike, the mountain man. And that definitely it's a hold in a portfolio that you can use the options because there's a fair amount of volatility for a stock that's priced at $10.50. There's a fair amount of volatility and there's a fair amount of juice in the option. And the dividend is about 2%. So if you pair the dividend with the juice that you're getting in the option, you've got a relatively, appealing for a buy and hold investor. You've got a relatively appealing rate of return if somebody's just sitting in cash or if they're worried about, like Mark was hinting at before, Mark Sebastian, that, there's nowhere for bonds to go but down and interest rates to go up. If that's got you spooked and you don't want to get into, the buy and hold kind of investing in the bond market, this Ford stock is definitely appealing in that manner because of the amount of juice in the premiums and the calls and the puts, and it is paying 1.94%, and you can put that into the Wheel of Fun and have some fun with it.
Yeah, and it's a fairly decent. I know you like these triple income names, and they already have the dividend. You're right. The vol is relatively decent at these levels. You can leg into your quote-unquote triple income, a.k.a. the Wheel of Fun, and then write it off on the upside when it gaps back up to 13 inevitably down the road, and you do all right on that trade, I would think. But I like your analysis that Ford is a sale because when you buy a Ford Explorer, they don't rape your entire life's worth of data at the same time like some of these
right.
people I know.
Yeah, that's funny.
Wait till they do that. Wait till there's a thumbprint to start your car, and then they upload the data to your GPS your computer, and your Facebook page comes up and it says, since you like the Ford Focus, you might like these 12 other things.
I know, that'll be hilarious. Since you like the Ford Fiesta, you might like this ramen noodle.
That sounds like some of the Amazon recommendations I've been getting of late.
TV. Borrowing food from your mom. Living in your parents' extra bedroom.
I love it. All right. Well, anything else you guys catching your eye before we dive into the old odd block today?
No.
A resounding no. So with that, we shall close out the old trading block today and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block. All
right, that funky tune means it's time once again for the old Odd Block. And if you don't know what the odd block is by now, then you just haven't been listening to the show long enough. So you'll have to figure it out on your own. Today's first up in the old odd block today, we have the name we were discussing just a little while ago, Groupon. Of course, that's GRPN. This is the name that of late has been trading fairly actively, about 19,000 contracts a day, which is pretty heavy for Groupon. But today they did a whopping 145,000 contracts. The bulk of that in that short squeeze we alluded to earlier, and the fact that the stock gapped up nearly 20% to 1174 in throughout the day's trading. And with that much volume, there wasn't any individual trend to really highlight in the paper. It was all across the board. But a couple interesting trades we saw. One of them, as we alluded to earlier, was a 1x2 put spread going up about 1,000 times or so. Actually, I think it was about 500 by 1,000. So 1x2. So not that much size given what we saw today, but still interesting trend, and it seems to echo what Mr. Sebastian has been working here in Groupon. We saw the June 7-9 ratio put spread going up, like I said, about 500 by 1,000 times on a net premium outlay of 33 cents a contract. Of course, if you look at these strikes, we saw a ton of activity on the June 7 and 9 put side of the fence. About 8,000 each of both of those strikes went up respectively today. So a lot of activity on this one. This is one of the few ratio put spreads we saw going up. Mr. Sebastian, is this in line with the strikes you were eyeballing as well?
Yeah, what was the exact strikes here?
It was the June 7-9 1x2 put spread. He netted it out for 33 cents.
June 7-9. Now, I actually was doing like the 12-8 and the 12-9. So I was buying a little more juice.
Oh, you were doing a lot more juice, yeah.
Yeah, but no, that's a great spread. You know, it lets you really play it drop into about $7, which is where I kind of have in between. Right around $8 is where this thing gets to be worth about $5.5–6 billion, which is what I think it's actually worth, and that's where you'd want to trade it. So in June and July, that's just great ways to get short the skew. Now, my only issue with that is that there are probably cheaper ways to get long, just based on the fact that the nines are a little pricey. I'd almost rather, one thing traders need to do is be very careful about where they buy and sell things. If I was going to follow this guy, I would actually probably want to buy the 11 and sell, maybe buy the 10 and sell the 9, or do it as a put spread, because that guy actually jacked up the 9 puts. You might actually almost want to set up a butterfly around that or something like that, because this guy kind of threw the whole curve off. So, I like the play, though. It takes in a little bit of a credit, I believe, right? No, it does not.
No, he ended up paying 33 cents on it when he legged it. Obviously the prices have changed a wee bit.
Cheap bet, not the end of the world, but I think it's the right idea, maybe not the best execution.
Well, we see that a lot with these ratios. All too often, the main focus is on reducing that premium outlay at all costs. They don't do exactly what you just said and look at the strike and the structure of those strikes and the vol levels of those strikes to see what has been bid up and perhaps what is a more appropriate vol level for their trading purposes. It's more of like, well, these two match up pretty well to reduce my outlay the most. I'm going to do 1x2 of these, And
I love that he legged it like nobody knows what he's up to. Hey, I'd like to buy the Groupon June 9 puts. Then 3 minutes later, hey, I'd like to sell the 1,000 of the.
So you're saying this wasn't a Sweetman Cherry execution deal here?
I doubt this came from Sweetman Cherry.
This 486 lot.
We wouldn't have known what this guy was doing if it came from Sweetman Cherry.
They are stealthy execution ninjas over there, shall we say. All right. But interesting enough to see.
I would say, having met Brian Sweetman, stealthy and ninja, probably
two
not
names that immediately spring to mind.
Immediately pop in here.
You never know
sitting right next to me, shaking his head.
You never know he's there until he's right behind you. It's amazing. He scares the hell out of me all the time. All right.
Oh, yeah. No, I agree.
So interesting enough that two people at least are working 1x2 downside put spreads, or in your case, upside as well, a little more juice on that 1x2 in Groupon. But interesting enough that two people having somewhat similar mindsets here amongst the hundreds of thousands of contracts going up in Groupon today. Jumping on over, another shame that Uncle Mike is not here today. This is another one of his favorites. Good old Dollar Tree Stores, Inc. They closed today down about 3% to $99.72. This is the name that usually does about 2,000 contracts a day. That did over 12,000 today. The bulk of this looking like a spec going into the earnings coming out on Thursday. And what we saw, the largest trade going up today was someone picking up a sizable put spread on the a 3,000 lot of the 185 put spread here in June in good old DLTR for 6,000 of that 12,000 contracts in this one spread. They netted it out to $3.31. So let's see, as we said, yeah, Dollar Tree closed at roughly 100 even today on the day. So this is a interesting spec here on some downside going into earnings in DLTR. No ratio, nothing else, just a straight up 1x1 downside put spread going into earnings. It almost seems quaint that this one, given some of the other names we've talked about lately. But an interesting name, interesting levels. I'm not sure. I haven't really had time to really look at it and see how I feel one way or the other about this one, but an interesting name.
I mean, like, why waste the money on the 25-cent put is my question. Is that really doing him a lot of good?
Like we said again, it's that it's probably
I have a feeling there was a non-Sweetman cherry broker that said, oh, you know what you should do to reduce your cost is sell that 85 put at a quarter.
It makes some risk manager somewhere.
Great trade.
It makes some risk manager somewhere.
Meanwhile, he's chinging on the commission. I mean, sorry. I mean, I don't mean to be a jerk about this, but way, way, way smarter options to sell than the 85 put at a quarter. Basically, every other option on the board is a better trade than that one. I mean, you could have gotten $1 for the 90 put. I mean, that really would have actually done something for him.
That would take a little more sting out of that trade than the 30-cent 685 puts. It's probably, like you said, it probably was some guy advising him on the execution who perhaps was a little less than savvy. Maybe he legged the two sides of it to juice his commissions a bit. And all kinds of interesting stuff goes into that execution hellhole before it comes out the other side.
One thing that jumps out at me too, if you look at all the numbers on this stock, you look at the chains, it just jumped out at me that there was 590 calls the front month, the May 105 calls. Somebody sold 590 of those. It might be the same guy that said, hey, we can help reduce the cost of these June 100 puts. We can sell the 85 puts, and then maybe we can come in the front month and sell some calls too. Because it looks like that might have something to do together. Although there is some activity on the put side in May on the put side, but there's really not a whole lot of action on the call side.
There's 593 of the May 95 puts going up, so that could have been a risk reversal that guy was legging in. It'd be odd to see those two precise volume numbers going up on two different strikes like that. So, hey, this guy could be legging into a risk reversal in the front month as well, and our analyst here just didn't catch it in time. But either way, a lot of interesting stuff. This kind of falls into the camp we talked about before of, you're really you're buying a lot of juice here with these June at the money options here going into earnings. So you got to make it worth your while. Whether the 85 put is the ideal way to structure that trade to reduce your premium risk.
Yeah, that's my whole point. Is I've just never. I mean, if the 85 put doesn't really reduce his cost, and if it drops to 84 and a quarter, he's immediately a big loser on selling that. It just doesn't make any sense to me. And I always wonder who these guys, some of these brokers offer advisory service, and I always wonder who's building these trades for guys. And sometimes it's great people like Sweetman Cherry Group. Sometimes it is not, and this is clearly one of those times where it was not.
Mr. T-Knob, what do you think of that execution before we close this one out? Would you ever structure a trade for a client that way and dumping those quarter puts on the 85 strike?
Yeah, no, I agree with everything you guys are saying. I mean, it just really doesn't do too much to the trade. He's still spending a lot of money on it. Yeah, I mean, I completely agree with you guys. There's other ones to sell. I like that 90, like Mark said. But yeah, I mean, we see the same thing. Sometimes people just, that's what they want to do. Sometimes they're being advised about it. So.
Yeah, I mean, it would make a whole heck of a lot more sense. So if you're long 3,000 of the 100 puts, selling 3,000 puts at a quarter, so you're taking, what is that? 3,000, $7,500. You're better off selling 100 against 3,000. Sell 100 of the 97.5 puts, and you're taking the same amount of cash, and then you got. If this thing gaps down, you got a free ride for taking it the same amount of cash.
Right, exactly.
And then you can ladder it. Like if it only goes down $7, then come out and sell the other 2,900. Ladder it down 95, 92.5, 90, 85. Yeah, that just seems like
it was
somebody just cut their teeth on a new trade. Like Liar's Poker. It's the German guy that bought the GE bonds in the book Liar's Poker.
Yeah,
with the new broker at the desk.
All right, and then we're going to close out the old odd block today with an old name. Actually, we're fortunate that good old Seabass is on the program with us today because this is a Seabass special. Because when I think middle-aged women's clothing retail, I think Mark Sebastian.
Ross Stores or Chico's?
Chico's, of course.
Oh, yeah, no, that's my Chico's is my bread and butter.
That's when I think of ladies fashion. I think of Mark Sebastian as well. Good old Chico's back on the old odd block today. Ticker symbol CHS. They closed today up a whopping penny to 14.42 on the day. This is the name that of late has been doing about 1,000 or so contracts a day. They did nearly 7,000 today. A lot of that is leading into the earnings coming up on Wednesday. I'm sure, Mr. Sebastian, you've been positioning accordingly, and this is your favorite name.
Oh, yeah. I actually have a few guys that are in a couple of my clients that like the stock. We kind of looked at some bullish butterflies. The big trade today was the June 14 puts. Let's see what we got here. Those were bought, and typically if you see an at the money put bought, it is probably in a slightly out of the money put that is bought in that size. Probably a protective put would be my bet. Or somebody setting something up. Doesn't look like it's a straight bear bet. You probably wouldn't do it after the dividend and after earnings in June. If you thought it was going down, you'd probably play the May. So my guess is that this is a stockholder hedging a long position, which for those of you who are listening is a synthetic call. So my guess is it's a bullish play. Longo, thoughts?
Speaking of bullish plays and synthetic calls, what our analysts actually wrote up today, but you're right, the big trade of the day was the June 14 puts, the bulk of those being purchased for around 60, 65 cents earlier in the session, but the one our analysts actually wrote up was if you look back to May, about 1,600 of these in the money May 14 calls were purchased today as well for about 90 cents. So there's some upside or positioning for some upside directly ahead of the earnings on Wednesday. We also have this guy, if he did these puts with stock, then he's looking at some synthetic calls out in June as well. So could be potentially two substantial bullish plays going into Chico's announcement, or it could be, like we said, just some guy hedging his downside in the underlying. Not the calls, of course, but the puts. But interesting stuff nonetheless. Two different sides of the fence lighting up the old tape in Chico's, in addition to your size bullish butterflies. Because when you think, I don't know, Uncle Mike, what is the potential for Chico's to steal my identity? Is that will that lead to a lot of upside for the future of Chico's here?
Yeah, the trademark or the IP play on this one, I'm going to go with is probably on the low end of the spectrum. Just looking at maybe the guy's long a bunch of stock, bought the puts. The numbers kind of match up. But if he's long, I don't know, what it would be, 160,000 shares of the stock, and he bought 3,300 puts, that puts him in a synthetic straddle. And then maybe he bought the calls in the front month to give him the upside after he put the synthetic straddle on. I don't know, just a thought. But Yeah, you're probably not gonna profit that much on the IP value of this stock if somebody takes over the trademark.
Hey, no, Chico's has a huge database of customers. Are you kidding me? You get that Chico's card, and you build Chico's points, and then they gather all. Why do you think you guys know why supermarkets have those value cards? Because it's illegal for them to collect data on you if you don't sign up for that value card. So all of those value cards that you're getting, Chico's, Jewel-Osco, Kroger, whatever, they're all designed, if you read them, those discounts are so that you'll use them so they can track your spending habits.
Oh, yeah.
As Mr. FHM says, to rape your identity, to coin a phrase.
Well, I would say it's more date rape your identity than actually rape it.
A little bit of roofies and...
No, it paid for dinner first. I mean, you should. It deserves it.
You did get a discount on your steaks, so there you go.
You're the one that ordered the lobster. Your identity's the one that ordered the lobster dinner.
So that we should have a mandate that these are changed from corporate loyalty programs to corporate date rape programs. Yeah, that's what they should be called, yeah.
Did you say a mandate?
I actually did, yes.
You kind of threw me with that one as well. I didn't know where you were going for a second there. My mind went to some dark places because we have Sebastian on the show today. I was ready with the edit button. All right. Before we go down any deeper or darker rabbit holes, we're going to close out the old odd block for today and dive right into the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the old Express block. This is the portion of the show where the boys from OX hold court and I get to rest my weary vocal cords. And in the old hot seat today for OX is none other than Big Tim Navabi, beret in place, beverage in hand. Mr. T-Nav, what do you have in store for our listeners today?
Well, I was told by our trading desk today, they had called down to the SIBO, and someone had told them at the SIBO that options on Facebook, I'm not sure, you guys know what that is, right? Okay. Options on Facebook will be available about 2 to 5 days, anywhere between 2 to 5 days after the IPO.
Oh, that's really fast. Wow.
Yeah. So, I kind of wanted to share that with you guys and our audience as well, and then again, for people that want to trade Facebook on Friday, be prepared, of course. What that means is it's not calling up, without your account number, with an ACH that's not cleared, with maybe a wire that's headed, to Options Express. It's just not there yet, and saying just buy. That's really the wrong way to go about it on many different levels. A lot of people have been calling us for the last year asking about this. And, I can kind of sense, that's sort of the approach that some people are going to have. And I don't think they're going to walk away very happy with that. I think there's, a way to make money in the IPO for Facebook. I don't know what it is, but I bet there is a way. And, well, in fact, I know how you can make money in Facebook. If you can sell it for a higher price than you bought it, you'll make money. Really, that's kind of the only way I know how to make money on things. So, to be prepared really means to, have your account, number one, in order. Have information on your account with you when you call us. That includes now the price of Facebook. So, this is going to be moving a lot, when it opens up. So, have an idea about a price that you would pay. Have an idea for a price that you wouldn't pay. And that helps because, if you know what price you want to pay, and if it's lower than that price, hey, you're going to get it for a better price. If it's higher, then today's not the day. Or at least, maybe just put in the limit order. But, frantically sort of asking where is it, and just saying buy, and, not really knowing what price you want to pay, or just saying, I'll pay the market price, and then, what is it again? It just really, it's not a good approach, and you're not really going to get the satisfaction, or even make money, from the stock. So, again, my theme kind of is always be prepared when you give us a call, when you're ready to trade, when you're ready to buy stock, when you're ready to invest, and that's the best thing you can do.
Tim Navabi, a.k.a. Mr. Boy Scout, with his cautionary tale to be prepared. But that is interesting you mentioned that the options could be listed as soon as 2 days after. That's fantastic. It's about time we started closing that window from, a couple of weeks down to just a couple of days. I'd be impressed if they can get them listed that fast, but that would be great if they could.
Yeah.
I'd love that.
Yeah, see those puts bit out of control as soon as they start listing. All right, enough bashing of Web 2.0 companies, at least for now, because right now it's time for the old listener mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, and welcome to the old mailbag. This is, of course, where you get a chance to chime in on the show, and if you'd like to participate in this segment in the future, then by all means shoot us an email at questions@theoptionsinsider.com, or you can DM us on Twitter, twitter.com/options, or post a question in our forum, or even send it to some of the other guys here. I know Mark is on Facebook and Twitter, and the boys at KYO are on Twitter. What are your handles again? You're at Option Pit, right, Mark?
Yes.
There you go. And you have another one too that Andrew lured out, something about lobster.
Oh, is Andrew.
And he's about to get Option Lobster, he told me, so that'll be a new one for you guys.
Yes, he is.
Lobtion. Lobtion. There we go. That's all sorts of disturbing, but anyway. So you can reach us any number of ways, and today's question comes in via email from a listener who goes by the name Todd Dusain. I'm not sure how you pronounce that. Dusaign, Dusain. Could be any number of ways, but he writes, I saw the article in the Financial Times this morning with Mark discussing the need for an after-hours order book for retail options traders. I also saw that the guy from the SIBO in that article thought that such a thing would require market makers to maintain tight markets. Doesn't that miss Mark's entire point? Couldn't this be done just with a basic limit order book like in the stock market, or am I missing something? And let me just catch our listeners up to speed. If you listened to the show a couple of weeks ago, we discussed this very topic. Since then, I went down to the Options Industry Conference and polled a lot of the exchange CEOs about this potential for an after-hours order book for options for retail. Got a lot of interesting responses on that front, as you could imagine. And I since then have talked to my friends over at the Financial Times and got them pointed in this direction. And they ran a big story about it this morning where we discussed a lot of these various topics and some of the benefits that could be offered to retail options traders if this did indeed happen. I encourage you, if you want to learn more about this article, then search for Box Considers After Hours Options Trading in Google. You can just find a link on the optionsinsider.com. And now you guys, Mark, I'm not sure if you were on the show where we discussed this a few weeks ago. Mike, I don't think you were either. Tim, I know your viewpoint on this already. Tim is a big naysayer on this. He thinks this is a recipe for raping.
You will get destroyed if you're if you think an after-hours book like that would work without market makers. Think again. The general public would get absolutely. Now you talk about your rape. They'd get raped worse than Mike Kavanaugh's identity. That's how bad they get raped.
I don't know. I think there's two kind of sides to this. On the one hand, I agree it would be better with market makers, but also I think the person he quotes in this article is Ed Provost from the SIBO. He told me the same thing on our radio show, which will be going up in a week or so, that exact same comment, and that is also a bit of a cop-out, because when you say that means essentially it's never going to happen, because if you're waiting to get market makers involved, that means you have to have the underlying trading later, and that's not going to happen anytime soon. So it's essentially saying they don't want to do it. So I don't think it works. Not unless you get a super liquid stock market.
So I just don't see how that could get filled.
Yeah,
and you're asking customers to come up with some sort of vol number, and customers will get destroyed in that type of environment. I mean it.
Yeah, there certainly is potential for that. I think one of the better ways to construct it then to hopefully limit that is to limit it to liquid names after earnings like Apple, so you only have a certain amount of time to do it. You limit it to some round, let's say at the money and round at the money strikes, and perhaps maybe to start with you only limit it to closing open interest. So then you have the proverbial guy we're always discussing on this show who blew a ton of money buying upside calls in Apple for $17, and now the stock's up 30 handles, let's say, and he gets a chance to maybe cash in on some of that working at closing offer. You're right. It does require some sort of intuition on their part or analysis to prognosticate the right offer.
Yeah. All this is setting up for the Citadels of the world to take money from market makers and the retail public.
Oh, they would love to lean against his order flow. There's no doubt about that. And that's why one of the reasons why I think it probably would actually happen, because market makers would love to trade against this paper and give them something to hedge. But the alternative right now is still nothing, So the alternative is either to wait for this perfect scenario where we have market makers in the after hours to make these tight liquid markets, which isn't happening anytime soon, or to continue doing what we do now, which is allow retail to essentially sit on their hands, unless they're one of the few very liquid, sizable account guys who are savvy enough to hedge their gamma.
Mark, I love the idea in theory. I just don't think it's executable.
Well, I, for one, will take the other side of this argument and say, Mark Sebastian, you sound like the king of Spain pushing Chris Columbus off to discover America, that the world is flat. I really think that what Mark Longo said, I think it's somewhere down the pipe. The exchanges, options in general is still a relatively new industry. The first listed option was 1973. So 39 years into this little voyage, they're talking about adding extended hours. I think it's a great step because it'll actually provide an ecosystem to allow the evolution of this industry to continue. I would put a disclosure and a disclaimer tighter than what you can think of. Like, make the broker read this to the person before they execute a trade in the after hours, that the after hours market are extremely illiquid, and unless you know what you're doing, you shouldn't use this. But I think it'll provide an ecosystem that, why can't they tie an after-hour stock market to an after-hour options market? And the second there's any uptick in volume, all these exchanges are going to jump on it. They're going to throw some money at it, and you'll see some consolidation. Rather than 12 exchanges fighting over all this turf, you're going to see the ones that figure out the ecosystem the quickest to a reconsolidation. So I, for one, think it's a great idea. Handled the right way, you can't build – the only job you start at the top is digging a hole. So you're not going to start at the top on this one. You have to be thoughtful of the investor that they could potentially get ripped up pretty good.
I think if you're going to do this, Mike, you have to do it like the way the CME did it, where it's really done all out, it's the same infrastructure running at the same time, and just allow the market makers to go wider. That's the way if you want guys to do it, then incentivize them to make markets. The CME doesn't work. The CME has guys that are making markets the whole time, and you need to get the same thing moving. If the exchanges are willing to commit to something like that, it could absolutely work really well. I agree 100% there.
Now you don't sound like the king of Spain calling Christopher Columbus.
No, I just think you need to do it right. And just some BS spread book that only retail customers could do, blah, 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 just sounds like a complete disaster. You have to do it right, is the way I would say. And if you just did tier one stocks after hour, they don't have the same spread limits, this and that, and all the other things going on with it. Yeah, it could work.
Unfortunately, the CME is that unique monolith who can kind of enforce that type of control across their marketplace. Whereas on the equity options side, it is a wee bit fragmented, and no one, unless you're talking some of the large exchanges, really has that sort of market power to do that kind of thing.
Well, that's why we need an option exchange in Miami.
There we go. That will solve all the problems.
Yeah, whatever.
But Mark, you will feel good that a lot of the exchange CEOs echoed your sentiments. They thought it required market makers as well. Only the few really sided with myself and Mike Cavanaugh that they could be done in the limit thing. I think a lot of that was because a lot of them just don't want to go down that road of having after hours, adding extra personnel. It's a lot of work, So there's a lot of effort to that. And I agree. The ideal way.
If you're doing after hours, you need to make it worth it. You need to be able to set up an ecosystem that would actually support volume, because that's all they really care about, right?
Yeah, they want numbers at the end of the day.
You're not going to set up a spread book for an after-hours spread book is not going to support volume, and that's why it won't work.
It's great to lean against, though. I don't know. And if you're Joe Retail and you want to close out your 10 lot, you bought it for $10. You're happy to get out of it.
How much would it cost you to build something like that, though, Mark?
A simple spread book? Not that much.
Yeah.
That's a matching order, closing open interest around ATM strike in a liquid name spread book. That's not that big of a.
How much would that cost?
Personal numbers. I think you can get it done for south of $1 million.
Sold to you. That works, and FINRA cleared, and all the regulatory headaches. All that type of stuff.
Oh, you mean actually like the legal costs and everything else that goes along with it? Okay, that's a little higher, but still, there is some interest in this idea, so I think we can.
Yeah, no, it's a great idea, but I don't think it's worth doing for a couple $1 million. You're not going to make money, and then you have to staff it. You're not going to make any money. You need to build an ecosystem that will support real voluminous trading.
I think to Mark Longo's point, and I agree with what Mark Sebastian's saying, if it's going to be done, it's worth doing the right way. It doesn't seem like there's enough interest to actually explore the right way. Everything in this country's history, when you dial down deep into the options market, has been about making things so we can then make things better. And right now there hasn't been a step towards making the thing, which is the after-hours exchange. Clearly, the entrepreneurs, the innovators and creators in our country and in the option space, you're motivated by the incentive. Is the juice worth the squeeze? Right now, you can't see the clear picture on the incentive, but $1 million, $3 million, whatever it costs to build this thing, some of these exchanges can sneeze $3 million, and it's a rounding error. Like, it's worth getting your name on it, creating this start of the ecosystem to make something, so somebody that sees the incentive in it can make it better. I think that's what. Getting this conversation, getting the after-hours options platform available, it's got to start somewhere. They're not going to start with the most elaborate multi-billion-dollar exchange. Somebody's got to take a shot. They come out with new contracts all the time. They got a weather fertilizer spread at the Mercantile Exchange that probably wasn't free to create. They're taking shots on things all the time. $1 million shot on building an order book that allows people to start making it better, I think is a good idea.
The C2 environment would be a perfect environment to set something up like this.
I agree. Let's go knock on their door and say, hey, let's do it.
C2 would be the perfect. It's got the backing of SIBO. It's got SIBO guys on it. It's a maker-taker exchange, which is probably what you need to do. And it's a really, I think that could actually work if you did it on one of those type of exchanges. Anyway.
An interesting discussion. I think it's a good one. Interesting debate as well. We have a split down the middle on the old option blog panel. I like that.
What did Tim think?
Tim naysayed it a week or two ago when we first brought it up. He thought he was on your side of the fence.
Tim loves naysaying. What he does.
Naysay Navabi.
I think you guys really have some good points. Some customers have difficulty understanding how and why they should be trading stock on the after hours. And then all of a sudden we bring this into the mix. I just see a lot of difficulty with people with actual customers trying to get them executed. But I like what Mike Cavanaugh said, that hey, we kind of read them off a little disclaimer saying, look, this is not a very liquid market, and you can and may lose your shirt.
Yes, as long as we disclaim them to death, I think we'll be all set. But like I said, an interesting discussion, one we'll certainly have to revisit down the road. And I think we can take a little pride in this show knowing that if this does eventually come to pass, it was essentially born here on the old option block, because I've been beating this drum to anybody who will hear it.
Well, maybe, Mark, if you think we can do it for under $1 million, maybe the four of us should just do it.
There we go. The option block
Sebastian,
exchange.
Can I borrow $250,000 for this? I can see Mark Longo's mustache turning yellow and him slipping on the orange jumpsuit as he becomes the options Lorax.
I like it.
That'd be great.
I like it. The options Lorax. All right, good conversation. I think we'll just leave it with the notion that sometimes if we wait for the perfect, it can be the enemy of the good. So we'll just leave it at that and close out the old listener mailbag. Great question this week. If you want to send in your questions, by all means, do so, and we will maybe feature you on the show just like good old Todd today.
I have one suggestion.
What's that?
Todd brought a great question to the group. I am willing to front the money on this, $200, to make an options block t-shirt that says I'm crazy about risk management, to encourage people to send in their questions that if they give us their address, we will send them I'm crazy about risk management orange and yellow shirt in favor of the Lorax to send to our listeners.
Are we trying to incent questions or drive them away? I don't know. What is the end goal there?
Well, you can think of something that might incent them.
Or how about this? How about the best listener question of the year? We'll fly to Chicago, and they can have dinner with me, Mike, and Mark, and it'd be on the house. And if they don't want Tim and Bobby to come, then they have to pay $100.
There we go.
Disincenting people.
I like it. I like it.
So I like the idea. No, we should give away a trip to Chicago, like summer, and like maybe sometime around September. Best listener question. We'll have you come out here. You can have dinner with the four of us.
I like it. A good plan for that. I think we are running a wee bit long now, so we're going to close out the old mailbag and dive right into an abbreviated Around the Block segment.
Around the Block.
All right, and welcome to Around the Block. And as we close out the old show for today, we'll give you a quick final update on Groupon. It has rallied back a bit, trading about $13.25 in the after hour. So it seems to be holding steady about $2.50 to the upside right now. I'm sorry, $1.50 to the upside right now. So interesting things to watch there in Groupon. But of course, we'll have to wait to see if Mr. Sebastian's fade is correct. Mr. Sebastian, aside from Groupon, what are you watching coming up around the block?
There's this little country called Greece that is out to ruin the world, and I'll be interested to see whether they can accomplish that.
I do know them for their tasty gyros, so I will be watching for those as well. But yes, interesting stuff to watch on the old Greek
great
front.
Restaurants as well.
Hey, perhaps we can ask them when they're in town this week for NATO what their plans are for the rest of the world and why they're trying to destroy us.
Who knows? One of my students did a study. Greece has been in default something like 50% of the time since the dawn of history.
That goes back to the days of Socrates. They were still in default.
Yeah.
I love it.
They actually have defaulted several times in kind of the ancient times. There was major Greek defaults that led to wars.
I love it. So I guess we're headed for World War III now off of Greece. Very dire news indeed. Mr. Kavanaugh, what are you watching around the block here, sir?
I'm going to be watching Greece now. Yeah, we're getting all geared up here for the big NATO event. I keep getting email after email from owners of different buildings that we have space in to our vendors saying that they're not going to be working on Friday and Monday, so that should be interesting. And I will be here all week watching the stock market go up and down as the protests go up and down LaSalle Street.
Yes, as the fires rage through LaSalle Street, it should see a nice correlation with the S&P.
That is correct,
The
sir.
CBOT is burning, S&P down 8 handles. All right. Mr. Tinov, bring it home for us, sir. What are you watching around the block, sir?
Yeah, I'm watching some of the international events unravel here. I'm watching the lows of the S&P in early March to see if they hold, and I'm watching some of the news that's coming up that we have this week. So I think we have some housing data. We have some releases. We have CPI tomorrow. Some housing data on Wednesday. Some employment data on Thursday. So yeah, should be a good week.
Should be a very good week, and that is going to do it for this episode of the Old Option Block. I, of course, want to thank my cohorts, my partners in crime, for joining me on the show today, starting with you, Mr. FHM. What is coming up in the land of KYO that may interest and or titillate our listening audience?
Absolutely nothing. No, I'm just kidding. The Wheel of Fun continues to spin with a lot of funness. We've got we're looking forward to next Tuesday where we've co-branded. Well, actually, all we're doing is offering up our office space to Mark Sebastian from the Option Pit. He's having his first Tuesday of Expiration Week formal trade get-together thingy. I'll let him comment on that, but we're looking forward to that. We've got another Mark Longo sponsored event in the Options Alliance meeting on the same Tuesday. So there's a lot of good stuff going on in the form of options trading, options advocacy, the right way to do business in the options world right here in a 2-block radius in Chicago. So a lot of stuff going on.
Good stuff. Illuminate us, Mr. Sebastian. What is going on in the Shootman and Cherry
first I've
group?
got my Option Alliance meeting, then after that, 2 things this week. Yeah, if you go to meetup.com, you'll find the Chicago Option Traders meeting. It is going to be once a month. It's just going to be a fun, there's so many traders in Chicago. I thought it'd be a good idea to see if all those interested in options wanted to get together once a month, just kind of talk about what's going on. And then on Wednesday, we're doing our free, for information, go to meetup.com, search Chicago Option Traders. And for those of you that live in other parts of the world, on Wednesday, the second part of our 3-part series on trading the weekly options. This is going to be Wednesday at 7 Eastern. It's going to be discussing how to sell premium in weekly options this time. Should be a lot of fun.
So the way that 99.9% of people trade them. I love it. Good stuff. All right, and last but not least, Mr. T-Knob, what is coming up in the land of OX?
We have a workshop. We have a workshop in Philadelphia, sponsored by CBOE's The Options Institute, and sponsored by Options Express, but the title of it is CBOE's The Options Institute Philadelphia Workshop. That is May 22nd. That's the Tuesday. It's from 6 p.m. to 9 p.m. At the Crown Plaza in downtown Philadelphia. So, that's what we've got going on. The title of that workshop, by the way, is it's a free workshop, and it is Trading Options and Managing Positions.
All right, thank you for that, Mr. T-Knob, and that is going to do it for this episode of the Option Block. For more information on all the topics we discussed today and much more, surf on over to theoptionsinsider.com. You'll find a lot of interesting information over there for anyone who's interested in options. And of course, we'd be remiss if we didn't close out the show without thanking all of you out there for downloading and streaming and subscribing to the show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.